In March 2023, Donald Trump made a statement that went largely unnoticed by mainstream media but sent shockwaves through gold markets. Speaking at Mar-a-Lago, Trump said, "We used to have us beautiful, we had real money. Now we have paper backed by nothing. That will change." Then in July 2024, during a campaign speech in Iowa, Trump said, "Day one, I will restore sound money to America. The dollar will be strong again, backed by something real." Most analysts dismiss this as campaign rhetoric, but Trump doesn't say things accidentally. And if you look at who he's surrounding himself with, Judy Shelton, who wrote a book advocating gold-backed currency, Robert Leiser, who believes the current monetary system favors China, Steve Bannon, who's called for economic nationalism, including sound money, the pattern becomes clear. Trump is preparing to do something that hasn't been done in 96 years, return America to a gold-backed dollar, and the target date isn't random. It's 2027. This isn't just economic policy. This is the largest wealth transfer in human history. A reset that will revalue gold by 10 to 20 times current prices, wipe out trillions in debt, destroy creditors, and shift global power from those who hold paper dollars to those who hold physical gold. And it will be justified not as economic policy, but as national security. Because China and the BRICS nations are preparing their own gold-backed currency to replace the dollar. Trump's reset is a preemptive strike. Go back to gold before China does. Let me show you exactly why Trump will do this, how it will work mechanically, the historical precedents that prove this pattern repeats, who will become unimaginably wealthy, and who will be completely destroyed, and why 2027 is the most likely date for the reset that will end the dollar as we know it, because this isn't speculation, this is pattern recognition. Currency resets happen every 50 to 100 years. Now, the last one was 1971, where 54 years passed you. Before I show you why Trump will return to gold, you need to understand what the gold standard actually is and why it ended. From 1879 to 1933, the United States operated on a classical gold standard. Every dollar was redeemable for a fixed amount of gold at $20.67 per ounce. If you had a $20 bill, you could walk into any bank and exchange it for 1 ounce of gold. This limited how many dollars the government could print. You couldn't print more dollars than you had gold to back them. This prevented inflation and government deficit spending beyond tax revenue. But in 1933, everything changed. The Great Depression had destroyed the economy. President Franklin Roosevelt needed to inflate the money supply to stimulate the economy, but he couldn't do that under the gold standard. So on April 5, 1933, Roosevelt issued Executive Order 6102. This order made it illegal for American citizens to own gold. Citizens were required to turn in all gold coins, gold bullion, and gold certificates to the Federal Reserve at $2,867 per ounce. Failure to comply resulted in a $10,000 fine and 10 years in prison. This was confiscation. The government seized private property. Millions of Americans surrendered their gold. And then once the government had collected the gold, Roosevelt revalued it. In 1934, the Gold Reserve Act set the new price at $35 per ounce, a 69% devaluation of the dollar overnight. Americans who had surrendered gold at $20.67 watched the government revalue that same gold to $35. The government expropriated $3 billion in wealth from citizens, and with gold revalued, the government could now print more dollars. This was inflation by fiat. From 1934 to 1971, the United States operated on Bretton Woods. The dollar was backed by gold at $35 per ounce, but only foreign governments could redeem dollars for gold. American citizens could not. The system made the dollar the world's reserve currency, but the system had a problem. The US was printing more dollars than it had gold to back by 1971. Foreign countries held $70 billion in dollar claims, but the US only had $10 billion in gold. France figured this out first. In 1965, Charles de Gaulle announced he would begin converting France's dollar reserves into gold. He sent a French warship to New York to pick up the gold. Other countries followed. Gold flowed out of Fort Knox on August 15, 1971. President Richard Nixon went on television and announced that the United States was closing the gold window. Foreign countries could no longer redeem dollars for gold. The link between the dollar and gold was severed. The dollar became pure fiat currency backed by nothing. This is the Nixon shock. Without gold backing, the government could print unlimited dollars. From 1971 to 2024, the money supply increased by over 3,000%. The dollar lost 98% of its purchasing power. What cost $1 in 1971 costs $750 today. But here's what most people don't understand. The gold standard didn't end because it failed. It ended because it worked too well. It prevented the government from printing money to fund wars and welfare programs. They removed gold backing so they could print freely, and for 54 years they've printed $36 trillion in federal debt, $300 trillion in total global debt, and now that system is collapsing. Now, let me show you why the current system is failing and why a return to gold is inevitable. The dollar's dominance depends on three things: global reserve currency status, oil pricing in dollars, and military enforcement. All three pillars are cracking. The dollar's share of global reserves has fallen from 71% in 2000 to 58% in 2024. Countries are diversifying because the US has weaponized the dollar. In 2022, the US froze $300 billion in Russian central bank reserves after the Ukraine invasion. This showed every country that dollar reserves can be seized for political reasons. The lesson was clear. Dollars aren't safe. The petrodollar is dying. In March 2023, Saudi Arabia announced it would accept one for Chinese oil purchases, breaking the 50-year petrodollar monopoly. In December 2024, Saudi Arabia joined BRICS. BRICS nations are creating alternative payment systems, settling trade in local currencies, and discussing a gold-backed BRICS currency. The petrodollar is ending. Meanwhile, US debt is spiraling. Federal debt is $36.120% of GDP. Interest payments alone are approaching $1.2 trillion per year. That's more than the defense budget. The government is borrowing money just to pay interest on previous borrowing. This is a debt-death spiral, and the only way out is inflation. Print money to pay debt in devalued currency. And here's the most important data point. Central banks are buying gold at the fastest pace in 50 years. In 2022, central banks bought one and only 136 tons of gold. In 2023, $137 tons. In 2024, over 1,000 tons. This is over 300 tons in 3 years. The highest since the early 1970s, right before the Nixon shock. Who's buying? China, Russia, Turkey, India, Poland, Singapore. These countries are converting dollar reserves into gold. They're preparing for something. China officially reports 2,264 tons of gold reserves, but analysts believe the real number is 4,000 to 6,000 tons. Russia increased reserves from 600 tons in 2010 to over 2,300 tons by 2024. These aren't random purchases. This is strategic positioning. China and Russia are preparing to back their currencies with gold. And when they do, the dollar faces an existential threat. Trump understands this. Judy Shelton, who Trump nominated to the Federal Reserve Board in 2020, has written extensively about returning to a gold standard. Robert Leiser believes the current monetary system favors China. Steve Bannon has called for sound money backed by gold. These are Trump's closest economic advisors, and they all support returning to gold. Now, let me show you how Trump would actually do this. There's a historical playbook. Roosevelt did it in 1933. Trump would follow the same pattern. Step 1. Declare a national emergency. You can't just announce a gold standard, you need legal authority. The president has that authority under the Trading with the Enemy Act of 1917, the International Emergency Economic Powers Act of 1977, and the National Emergencies Act of 1976. Roosevelt used these to justify Executive Order 6102. Trump would do the same. The justification would be national security. Trump would argue that China and BRICS are preparing a gold-backed currency to replace the dollar. If the US doesn't act first, the dollar collapses. This is an economic Pearl Harbor. The president must act. This framing makes opposition unpatriotic. Step 2. Gold confiscation or restriction. Trump might not confiscate gold as aggressively as Roosevelt, but he would restrict it. The executive order would likely prohibit Americans from holding more than a certain amount of gold, say 5 ounces per person. Anything beyond that must be surrendered to the Treasury in exchange for dollars at the current market price. Why confiscate? Because the government needs gold to back the currency. The US currently holds about 833 tons of gold at $2,000 per ounce. That's about $520 billion, but the US money supply is $21 trillion. The government either needs more gold or must revalue existing gold much higher. Confiscation provides more gold. Revaluation makes existing gold cover more currency. Step 3. Revalue gold massively. After confiscating or acquiring gold, the government announces a new fixed price for gold relative to the dollar, not $2,000 per ounce. Let me show you the math. The US holds 833 tons of gold, which is 261 million ounces. At $2,000 per ounce, that's $522 billion. At $10,000 per ounce, that's $2.61 trillion. At $20,000 per ounce, $522 trillion. If you want to back 25% of the $21 trillion money supply with gold, you need about $5 trillion in gold value. That requires gold at roughly $20,000 per ounce. When the revaluation happens, gold's price doesn't rise gradually. It jumps overnight. The government announces the new price. Gold miners, gold investors, countries holding gold, they all see their wealth increase by 5x or 10x instantly. This is the greatest wealth transfer in history. Those who held gold become rich. Those who held dollars lose purchasing power because while gold revalues up, the dollar revalues down. A dollar that used to buy 1/2000th of an ounce now buys 12,000th. The dollar has been devalued 90%. Step 4. Restructure debt. This is the hidden purpose of the reset. The US government owes $36 trillion at current rates. This debt is unpayable, but if you devalue the dollar by 90%, the debt becomes payable in cheaper currency. The government still owes $36 trillion nominally, but in real purchasing power, that $36 trillion is now worth only $3.6 trillion in pre-reset dollars. The debt has been inflated away. Who are the creditors? Foreign governments, central banks, pension funds, insurance companies. China holds $800 billion in treasuries. Japan holds $1.1 trillion. If the dollar devalues 90%, these countries lose 90% in real terms. They get paid back nominally, but in worthless currency. This is de facto default without the legal stigma. Step 5. Implement the new gold-backed dollar. After confiscation, revaluation, and debt restructuring, the government announces the new system. Every dollar is now backed by a fixed amount of gold at $20,000 per ounce. American citizens cannot redeem dollars for gold. Only foreign governments can redeem, and only under strict conditions. This is Bretton Woods 2.0. The dollar is technically gold-backed, which restores confidence. This 5-step process could happen in less than a year. Announce the emergency. Give citizens 90 days to turn in excess gold. Revalue gold simultaneously. Restructure debt through inflation. Implement the new system. By the end of 2027, the dollar is gold-backed. The debt has been inflated away, and America has reset its economy at the expense of creditors and dollar holders worldwide. Now, let me show you why 2027 is the most likely date. Historical currency resets follow patterns. The last major reset was 1971, the Nixon shock. Before that, 1933, Roosevelt's gold confiscation. The pattern is 50 to 100 years between major resets. From 1971 to 2027 is 56 years. From 1933 to 1971 is 38 years. From 1879 to 1933 is 54 years. The average is about 50 years. We're overdue. Second, 2027 is 100 years after 1927. The peak of the 1920s bubble before the 1929 crash and 1933 reset. Historical cycles often repeat on century marks. Third, Trump's second term would run from January 2025 to January 2029. Is 2027. Major controversial actions typically happen in years 2 or 3 when political capital is highest. For a second-term president who can't run again, 2027 is when Trump would have maximum leverage. Fourth, by 2027, the dollar crisis will be acute. Federal debt will exceed $40 trillion. Interest payments will approach $1.5 trillion. The BRICS currency, expected to launch in 2025 or 2026, will be gaining adoption. The crisis will be undeniable. Emergency action will be politically justifiable. Fifth, Trump's reset must preempt BRICS. If BRICS launches its gold-backed currency first, the dollar loses. The timing would be late 2026 or early 2027, just before or just after BRICS launches. This is financial warfare. Whoever moves first wins. All these factors point to 2027, and if you understand the pattern, you can position before it happens. Because once the reset is announced, it's too late. Now, let me show you who wins and who gets destroyed. First, gold holders win massively. Anyone who owns physical gold before the reset becomes 5x to 10x wealthier overnight when gold revalues from $2,000 to $10,000 or $20,000 per ounce. But there's a catch. If gold is confiscated, your gains are capped at the government's payment rate. Gold miners win. Companies that mine gold see their reserves revalue overnight. A gold deposit worth 100 million at 2,000 gold becomes worth 1 billion at $20,000 gold. Stock prices explode. Barrick Gold, Newmont, Franco, Nevada could see 10x to 20x gains. Countries holding large gold reserves win. Russia's 2,300 tons at $2,000 per ounce is worth $150 billion. At $20,000, $1.5 trillion. China's hidden reserves, if 5,000 tons, would go from 320 billion to 3.2 trillion. These countries gain massive geopolitical leverage. People with hard assets win. Real estate, farmland, productive businesses. Anything real maintains value. If you own a house worth $500,000 and the dollar devalues 90%, the nominal price becomes $5 million. But your mortgage, if fixed rate, is still $300,000 nominal, worth only $30,000 in real purchasing power. Your mortgage effectively disappeared. Now, who loses catastrophically? Dollar holders. Anyone holding cash, checking accounts, savings accounts. When the dollar devalues 90%, you lose 90%. If you have $1 million in cash, it becomes worth $100,000 in purchasing power. Bondholders get destroyed. U.S. Treasury bonds, corporate bonds, any dollar-denominated debt. You lent dollars, you get repaid in dollars. But those dollars are now worth 10% of what they were. A 10-year Treasury bond paying 4% annually looked safe, but if the dollar devalues, 90% your bond is worthless. Foreign creditors lose the most. China, Japan, European countries holding treasuries, they accumulated these reserves through decades of trade surpluses. Now their $2 trillion in reserves becomes worth $200 billion in real terms. This is the largest theft in history. Pension funds, insurance companies, and retirees lose. These institutions hold massive bond portfolios. When bonds lose 90% of value, pensions become insolvent. Retirees who planned on $50,000 per year find their income buys what $5,000 used to. They can't work, they can't rebuild, they're destroyed. The middle class gets hollowed out. Most middle class wealth is in dollars, savings accounts, 401 kiloseconds invested in bonds. The middle class that spent 40 years saving for retirement sees those savings evaporate. Society becomes wealth owners and everyone else. This is neo-feudalism. Now, let me show you the geopolitical dimension. Trump's gold standard reset isn't just economic policy, it's financial warfare against China and BRICS. Since 2008, China has been working to displace the dollar. China created the Asian Infrastructure Investment Bank. China launched Belt and Road. China developed CIP as an alternative to SWIFT, and China has been accumulating gold faster than any country in history. This is preparation for a win-backed currency to replace the dollar. In 2023, BRICS expanded. Saudi Arabia, UAE, Iran, Egypt, and Ethiopia joined. Now, BRICS includes 45% of global population and 36% of global GDP, and BRICS announced plans for a common currency backed by gold and commodities. This currency would be used for international trade among BRICS nations. No dollars needed. This is the end of dollar hegemony. If BRICS launches a gold-backed currency and the dollar remains pure fiat, international trade shifts. Oil producers would prefer BRICS currency. Within a decade, the dollar loses reserve status. The US can no longer print money and export inflation. The American standard of living falls by 30 to 50%. This is an existential threat. Trump's reset is a preemptive strike. If the US returns to gold backing before BRICS launches, the dollar regains credibility. Trump can argue we've restored sound money. Trust us, not China. This undercuts BRICS. The US retains reserve currency status, but on a gold standard rather than fiat. But there's a darker possibility. The reset is a trap. The US returns to gold, revalues to $20,000, and invites the world to trade in gold-backed dollars. Other countries start accumulating dollars again. Then once the US has locked the world back into dollar dependence, the US suspends gold backing again, just like Nixon did in 1971. Use gold backing to restore confidence, then remove it. This would be the ultimate con. China and Russia understand this. They won't fall for the trap. They'll continue building alternative systems and the world will split into two monetary systems, dollar zone and BRICS zone. Cold War economics, competing currencies, financial warfare. Every country must choose sides. Let me give you the timeline of how this would unfold. 2025, Trump takes office. First year is spent with appointments and immediate crisis. Trump's economic team begins studying gold standard implementation. No public announcement yet. Markets remain calm. 2026, the dollar crisis intensifies. Federal debt exceeds $40 trillion. BRICS announces its gold-backed currency will launch in Q4 2026. Several oil nations announced they'll accept BRICS currency. Dollar's share of reserves falls below 55%. Treasury yields spike. The Fed prints money to buy treasuries, accelerating inflation. Trump uses this crisis to justify emergency action. Late 2026 or early 2027, Trump announces a national economic emergency. In a prime-time address, Trump explains that China and BRICS are launching a gold-backed currency to destroy the dollar. Trump signs an executive order restricting gold ownership, freezing convertibility temporarily, and preparing the return to gold-backed dollars. Markets panic. The gold spikes 50% in days. The government suspends gold trading. Banks close for a bank holiday lasting 1 week. Mid-2027, after the bank holiday, banks reopen. The Treasury announces the dollar is now backed by gold at $15,000 to $20,000 per ounce. Private ownership is restricted to 5 ounces. Anything beyond must be sold to the Treasury. Compliance deadline is 90 days. Failure results in confiscation and criminal penalties. Late 2027, the transition completes. The dollar is gold-backed. International trade resumes using the new dollar. Some countries accept it, others reject it and use BRICS currency. The world splits into two monetary zones. Inflation rages in the short term as prices adjust. Workers protest. Riots occur, but gradually the economy stabilizes. The debt in real terms has been slashed. The reset is complete. So what do you do? How do you position? I'll be will view or feel what you will view or decision the to have limited time. Here are the strategies based on historical precedent. Strategy 1. Buy physical gold and hide it. If confiscation happens, gold you surrendered gets compensated at pre-valuation prices. Gold you keep illegally but successfully hide appreciates at the full revaluation rate. In 1933, some Americans hid gold and became wealthy. This is illegal and risky. But historically, it's the highest return if you don't get caught. Strategy 2. Buy gold outside U.S. jurisdiction. Buy gold in Switzerland, Singapore, or other countries with strong property rights stored in allocated accounts. If the U.S. confiscates domestic gold, your foreign gold is safe. This is legal and lower risk. Strategy 3. Buy gold mining stocks. Miners benefit from revaluation without confiscation risk. Own shares in foreign miners operating outside U.S. jurisdiction. Canadian miners, Australian miners. These are safer from U.S. nationalization but benefit from gold revaluation. Strategy 4. Buy hard assets and borrow against them. Real estate with a fixed-rate mortgage. Farmland with a loan. You borrow dollars today, you owe dollars after revaluation, but those dollars are worth 10% of what they were. Your debt disappears. Your asset maintains value. Strategy 5. Hold foreign currencies and assets. Swiss francs, Norwegian krona, Singapore dollars, currencies backed by strong economies. Also, invest in foreign real estate, foreign stocks. Diversify out of dollar exposure. Strategy 6. Build survival reserves, food, water, fuel, medicine. If the reset triggers bank runs and supply chain disruptions, having physical necessities could be life-saving. Every currency reset involves temporary chaos. These strategies aren't financial advice but based on historical patterns. These are the strategies that worked in 1933 and 1971. Those who held hard assets and gold survived. Those who held paper were destroyed. Let me end with this. Trump's return to the gold standard isn't certain, but the probability is high. The dollar is failing. BRICS is rising. Debt is unsustainable. Historical cycles point to 2027. Trump has the advisors who support it and the political incentive to do something dramatic. Returning to gold would cement his legacy as the president who saved the dollar, restructured the debt, and defeated China's monetary challenge. Whether Trump intends this or events force it, the reset is coming. 2027 is the most likely date. Gold confiscation or restriction. Revaluation to $10,000 to $20,000 per ounce. Debt restructuring through devaluation. Implementation of gold-backed dollar. Justification through national security emergency. This will be the largest wealth transfer in history. Those who see it coming and position correctly could multiply their wealth by 10x. Those who don't will lose 90%. Roosevelt did this in 1933. Confiscated gold, revalued it 69% higher. It worked. Nixon did this in 1971 and did gold backing devalued the dollar. It worked. Trump will do this in 2027, and if history is any guide, it will work. America will survive, but transformed. The Great Reset isn't a conspiracy theory, it's a historical pattern. Currency resets happen every 50 to 100 years when debt becomes unsustainable. We're at that point. The reset is coming. Trump might be the one to execute it because the math doesn't work anymore. The debt can't be repaid in honest money. It can only be repaid in devalued currency. That requires a reset. If this documentary showed you a pattern you'd never seen, if you understand that 2027 fits the historical pattern perfectly, then you have a choice. Ignore it and hope it doesn't happen. Or prepare, buy gold, acquire hard assets, reduce dollar exposure, and position for the greatest wealth transfer in history. Trump's plan to bring back the gold standard. The hidden in a 2027 reset. The pattern is clear. The timeline is set. The mechanisms are documented. All that remains is execution. And when it happens, the world changes forever. Those who prepared become wealthy. Those who didn't become poor. The reset is coming. Trump knows it. China knows it. Now you know it. What you do with this information determines your financial future. Welcome to the greatest monetary transformation since 1971. It starts in 2027, and there's still time to prepare, but not